Hi dears, today we are discussing about the topic operating lease. The previous videos we already discussed what is lease, the types of lease. There are two types of lease. First one financial lease and second one operating lease. Here we are discussing about what is operating lease and what are the accounting treatments for operating lease. We know that operating lease is a short-term lease and the ownership of the asset is not transferred in operating lease. Here we are discussing about some features of operating lease. First one, risk and reward of ownership is not transferred. Here we already said that in operating lease the risk and reward of ownership is not transferred to lessee. The ownership should be remain in the hands of lessor. The second one is lessee is responsible for repair and maintenance of the asset. If there is any repair or maintenance for the asset, the lessor is responsible for repair and maintenance it. In case of financial lease, lessee is the responsible person. Here lessor is the responsible person for repair and maintenance of the asset. And third one is a short-term rental agreement. There is no ownership transfer, so it's a rental agreement only for short term. And the fourth one, asset is not recognized in the balance sheet. We know that here the lease agreement is treated as a rental agreement, so the asset is treated as an expense and is not treated as an asset in the balance sheet. Then fourth one, lease rental payments are charged as expenses in the statement of profit and loss account. We say that the lease agreement is a expense and it's shown on the profit and loss account only, not in the balance sheet. Then we want to discuss about the journal entries or accounting treatments of operating leases. First of all, we are discussing about journal entries in the books of lessee. The first journal is here, the journal entry for lessee rental amount due, lease rental account debtor to lessor is an expense. Then the second one, payment of lease rental, the journal entry for paying lease and rental on every period, end of each period. The amount, the journal entry is lessor account debtor to cash. It is the entry for paying the lease rental for every end of the period. And third one, profit and loss account debtor to lease rental, the rental amount charged transferred to statement of profit and loss account. We know that in operating lease the payment for the asset is treated as an expenses, so here we are transferring the amount of each payment to the profit and loss account, statement of profit and loss account. Okay, then we are discussing about the accounting treatment for in the books of lessor, journal entries in the books of lessor. The first journal is for income due from lessee. Journal entry is lessee account debtor to lease rental. It shows as an income in the books of lessor. The second journal entry is passed while receiving the rent amount from lessee. The journal entry is cash account debtor to lessee. And the third one, the income credited to profit and loss account. Profit and loss account debtor to lease rental. These are the journal entries in the book lesser on operating lease. Now we are discussing an example how to journalize the entries of operating lease. Here the question is, X Limited entered into an operating lease with Limited to rent out an office premise at an annual rent of 1,20,000 rupees for a period of 5 years. The lease rentals are received at the end of each year. In securing the lease, X Limited spent an amount of rupees 1 lakh as commission. Give the journal entries in the books of X Limited. Here we want to prepare the list in the books of X Limited, who is the lessor. First of all, we want to understand that here there is a commission for the lease asset. So we want to know about how it is treated. Here the commission is an amount initially. The commission amount should be paid in initially, so it is treated as a paid because the amount paid initially, but it is actually payable in 5 years. So first of all, we are treated it as and prepaid expenses. The amount of commission 1 lakh is treated as prepaid expenses at the beginning, but it is spread over the lease term 5 years. Here the amount paid for each year is 20,000. Then we want to discuss about the journal entries, how to prepare journal entries in the books of X Limited, who is the lessor. Okay, the first journal is prepaid expenses accounted to cash. This is the amount paid for commission at the beginning of the lease agreement. Here the full amount 1 lakh is treated as prepaid expenses. Then at the end of each year, the first entry is Y Limited accounted to rental income. To record rental income, we know that rupees 1,20,000 is the periodic rent. So the rental income is 1,20,000. It is debited to Y Limited. Y Limited accounted to rental income. Then it is the due entry in rental income due entry. Then the second one, cash account debtor to Y Limited while paying by the Y Limited, the rental amount paid by the Y Limited. Then the third entry is for transferring the profit into profit and loss account. Rental income account to profit and loss. Here the profit and loss account is credited and profit is increased. So the entry is rental income account to profit and loss account. Then we want to record the commission expenses on straight line basis over the lease term. The total amount of commission is 1, and in every period, there is 5 years, in end of the every period we should transfer an amount of commission 20,000 for from prepaid income to commission accounted to prepaid income. Then the commission is a profit, so profit loss accounted to commission 20,000. Okay, these are the journal entries in the books of X Limited, who is the lessor. Here we know that the commission amount is treated as a prepaid expenses at the beginning, and the amount is transferred to profit loss account commission at every end of the year. Here the last 5 entries are repeated for 5 years. Okay.